I'm your host, Carlo Cardilli, Head of Product at Alpharank. Welcome to our conversations around the best practices for growth for your financial institution. I'm delighted to be joined today by Kardim Brown, who's the VP of Marketing at Nassau Financial, and Dean DeCarlo, President of Mission Disrupt. Good to see you both. For those who are new to the series, Alpharank is an optimization system for the online branch. Our clients increase their loans and deposits by at least 50% in the first 6 months without spending an extra penny on marketing. Our offering keeps your activities focused on the highest dollar output from your online marketing. Any marketing campaigns you run, whether it's a targeted email, a postcard with a QR code, or a Google ad, will tell you exactly how many dollars you booked from that action, and most importantly, how to get more dollars for that action. The insights come from a model that we trained on 6.6 billion first-party data points from over 150 participating banks and credit unions. This model provides recommendations to curb abandonment, improve lead quality, and maximize dollar production. Everyone in the audience today can get a free 1-month subscription to the Alpharank system to see how it works for you with your own data. So just visit us at alpharank.ai. Welcome to our audience. We want your participation and your questions. We'll have you in listen-only mode at first. You can submit questions through the Zoom Q&A panel. When we get to that Q&A segment, we will unmute your line, let you ask the question live, have a genuine interaction, or if you're really shy, we'll just read it out for you. Everyone will get a follow-up email with links to the recording, any other information from today's discussion, and the follow-up from the webinar. So, are you having a hard time proving the value of marketing to your CFO and your CEO? Are you struggling to get the maximum bang for your very limited marketing bucks? So we're going to hear from Kardim and Dean on how to run effective performance marketing, talk to the C-suite, and stay competitive against the meta banks. Kardim will lead us through Nassau Financial's journey to transform marketing from a cost center to a profit driver through effective marketing. Dean will give us the actual details and how execution starts with improved tracking, data-driven decisions to drive continuous growth and more fund deposit. Kardim, great to see you. How have
Good
you
to see
been?
you. I'm good. How about yourself?
Been really good. And of course, Dean and I have seen a lot of each other on the conference circuit. So let's get into the obvious question. Why are we here today? Why does measurement matter, Kardim?
Well, personally, measurement is extremely important in marketing. We spend a lot of money in marketing, and people want to know what happens with that money. What's the profitability? What's the ROI on the campaigns that we run?
And if you are not able to measure, improve the ROI on the campaigns, what happens? What's the downside?
Yeah, well, for sure, you don't get more money for next year's budget. That's 100%. But then you don't know what direction you're going in. You don't know if you're doing a good job. You're running the right campaigns. You're getting the members that you need and making the goals that you need for the overall organization.
Can you tell us a little bit about the expectation of your executive leadership? Um, I recall that your CFO is a pretty numbers-driven person, like most CFOs are. So, what is CFO quality reporting, and what are they looking for?
Yeah, the CFO, they don't want to see how many clicks happens. They don't really care about that. They want to see how many conversions did we get? What were the dollars and cents that we earned and we're gonna earn on the conversions that we made from the campaigns that we ran?
That's pretty typical. When we first started with this product at Alpharank, I was personally very heavily influenced by a conversation I had with the CFO of a credit union, who's now the CEO of that credit union. Seems to be almost like a straight path from the CFO into the corner office. From the books to running the organization. They're really no fluff people. And he just wanted to know three things. What did my marketing organization spend? What do they bring in? And how much net income do we think we'll make from these things? Because I want profitable products. I don't want any more personal loans. So, and then, And then I'm just going to divide the first number by the second number. That's the return on investment. And then I'm going to make a decision on how much budget to give you next year, which to me is pretty much the essence of performance marketing, Dean. Wouldn't you agree?
Yeah, for sure. I mean, I think like what we see in the credit union industry, in the banking industry, is this idea of clicks and impressions, and marketers grasp on that because that was the old way of doing digital marketing, right? And it was easy to measure at first. But really, that's only demand gen, and
Hmm.
it's not what's fully driving the organization forward in terms of hitting those goals, right? So I really feel like encouraging everybody to get onto first conversions and then ultimately funded loan and deposits, like that's where you need to drive your marketing organization, right? And that's true performance marketing. And ultimately, like that's how you gain the respect of the CFO. When you figure out how many loans and how many funded loans and how many deposits you're getting, you're able to go back to that CFO and actually say to them like, hey, um, this is what we did. And by the way, the new goal that you guys gave me, here's what I'm going to need to get to that goal, if that makes sense. And that could be budget wise, right? You might need more
Hmm.
budget than what they're giving you right now to hit that goal. But they think, yeah, you should be able to hit that budget. You should be able to hit that goal with your current budget. That's not always the case, right? I mean, performance marketing is math. You do have cost per acquisitions. You can't just magically put those in half, but you can use the data to make your case, if that makes sense.
Hmm. Hmm. But then when you do that, and I want to double click on that, when you start having that conversation with the CFO, like Cardium goes in and say, hey, last year you gave me X and I got you Y. This year, you want 2Y, so you're going to have to give me 2X. You really just change the dynamic and you're no longer a cost center. You're now a revenue driver.
Exactly, right. And I think as marketers, we're often looked at as the support group. We are the people that are making the pretty graphics or the pretty ads. And we really have to change, that perspective, right? We want to get rid of that stereotypical that we're a support function and really own that, we are a revenue driver. We are the growth machine for our organizations.
Especially now there's a perception that, I don't need people anymore to create the pretty things. I just, dump it into Nana Banana and I got the perfect ad. So what's the role for the performance marketer in this world where the content can be generated with just a couple of keystrokes?
For me, I feel like it's the strategic direction.
Hmm.
But to get that direction, you need the data to prove what you're saying is actually true. You need to be able to prove that, paid ads are driving XYZ and SEO is driving XYZ in order to prove your point, right? So what I really see for performance marketers is that it's strategy driven, it's backed with insights, and then in that case, you really become if you're not in that C-suite yet, that's like the path to get there is once you have the
Hmm.
data to prove out the strategies that you're doing. That's how you're going to get there. That's how you're going to get that respect. And ultimately that's performance marketing, uh, at its core.
hmm So I think that ties very much to your journey, Kardim, as an executive at Nassau Financial, using this framework to build a different kind of organization and a different kind of marketing function, just as Dean described. Can you tell us a little bit about what your journey has been?
Yeah, so prior to getting the Alpharank program, it was very difficult to prove, what was working and what wasn't working. But after it made it much easier to be able to have the conversations with the CFO, showing them where our efforts, what conversions we got, what revenue generations, what new members, and from what campaigns we did. They speak very dollars and cents, and that's what you have to show them. And we need to know what budget was set and what their goal is and set the expectations. We have to change the conversations with the CFO because they might want 1,000 new members, but only give us enough money for 500.
Yeah. So now you've got a good data-driven track record. You've done the optimization. So in effect, the campaign is going to drive, let's say, um, a new funded vehicle loan, say at 250 per, $250 per funded vehicle loan. So if the CEO or CFO comes in and says, "Hey, Kardim, I need 1,000 new vehicle loans next year because the branches are not going to get it done," you can just say, "Okay, well, this is what it's going to cost. This is my track record. You give me X, and I'll give you Y, and then you can get that money." So then it comes back to you. You got the budget, Dean. What's the difference between campaigns that drive form fills and campaigns that drive these real dollar outcomes on the balance sheet so you can make your client Cardim successful and he can meet the goals that come with the budget?
Yeah, I think it ultimately comes down to the tactic of deploying like a closed loop system between marketing and sales. And I'm going to call it sales. Let's just say our loan department, though, right? Because
Mhm. It is sales. I mean, it's a different kind of sale with a where we're giving them money and then the money comes back in, with interest, but it is sales.
exactly. And on platforms, sometimes that's called Google offline conversions or Meta
Hmm.
offline conversions. And why I'm talking about closing the loop here is because when you get a conversion on these platforms, the algorithm learns that that is what you have set as success. So
Hmm.
typically what you see if you're tracking conversion, you are telling Google, I'm just going to use Google as the use case here, that when they fill out a form, that's successful. And that's only like partly correct, right? Of course, we need to get that volume of lead forms or the LOS actually filled out. But what we
Hmm.
really need to know is like when is that loan being funded
Hmm.
or the member depositing money? Because that data, that's the ultimate indicator of success. And we have to be able to train the algorithms off of that, right? And that
Hmm.
could be a very
Hmm.
different behavior or the group that's taking that action could actually be very different behaviors or have different traits than somebody just filling out the form. So
Yeah, yeah, and that's what we call the look to book ratio. You want bookers, not lookers. So, people who filled out the form, they're lookers, but who's really going to book a loan with you?
exactly, exactly. So the cleaner that data is and that you're able to feed that back, the higher likelihood that your campaigns are going to get better and more efficient.
Hmm. Hmm. It's fascinating what you just mentioned. Obviously, you used the Google example, also applies to Meta. But the way I think it's a useful way to think of it, and think of Google, old school Google is I'm just bidding on clicks, and you're telling Google, hey, I'll take 1,000 clicks at $1.50 per, and send me the clicks, and I'll send you $1,500. And Google goes, okay, I'm gonna go fill your order. And now instead, what you're telling Google is like, "Hey, what I really care about is a funded account or a funded loan. And I don't want to pay more than, say, 250 for each one of these. So you've got to figure out the quality to get me there. I don't really care about the number of clicks. I care about this outcome metric. And then you have to send me good clicks. You can't send me garbage because it won't work. You're giving them a more complicated problem, but Google's happy to take all the data you send back in this closed loop to figure it out. And it's really just giving Google or Meta or anybody else a better prompt, right? It's about the feedback.
Yeah, and you do need that feedback, by the way. Like if you don't have that, those platforms are going to continue to guess or continue to assume that the lead form is the ultimate goal. That won't just happen automatically. So like that's a really vital part about lowering that CPA and being able to hit the goals that you have that the C-suite are ultimately giving us.
Hmm.
My case, what
Hmm.
Cardine is giving us too, right? So
Right.
that's a big thing. We have to be accountable for that.
Hmm. Hmm. So, Kardim, now that you have the system working, how does this play out when shifting budget between channels as you respond to different mandates? Like, for example, what if they come in Q1 2026, hey, it's time to focus on deposits, or no, hey, it's time to focus on vehicle loans. This side of the balance sheet needs help, or maybe there's a new product that the credit union wants to push, like say credit cards. How does that work?
Um, it completely changes, the mindset from the conversations I used to have prior. I would have to agree
Hmm.
with them because I didn't have the data to argue their points. Now that we have the Alpharank system, I'm able to say we have something working, let's say auto loans. Why would I switch that to a credit card promotion just because it's the holidays? I understand we want to promote that, but why stop what's working?
Finally, somebody says the quiet part out loud. I mean, look, the reality is, uh, there's some areas where, credit unions, independent banks are particularly strong. You could do a lot of stuff around mortgages, around home equity, and vehicle loans, the products that make money, where the local angle, I think, is very helpful. But I see a lot of financial institution, like you just mentioned, trying to drive credit cards when you're like mid-market to small institution. And I think, frankly, credit unions are always going to struggle with credit cards because all the great value propositions are locked up with the big rewards program. So, Chase has United, Citibank has got Costco, they've got Apple, all the significant affinity plays are just are gone. They're off the table. They're locked up by the mega banks. So credit cards, what are you going to do? You're going to do cash back, but that's just not exciting. It's not different. It's not local. So you're right. You got a vehicle loan program that's working. It's coining money and it's putting good loans on the balance sheet. You just double down on that.
And Carlo, I think to Kardim's point too, like the C-suite, like in a classic C-suite move, they just see the shiny object, they point to
Hmm.
us, and they want us to run as marketers.
Hmm.
But thinking about this from the platform side, right, Google side, what they're when they tell us to turn off a campaign, what they're actually doing is like introducing volatility into these ad platforms. And the ad
Hmm.
platforms absolutely hate that. When you're pausing a campaign and then restarting it, it's probably one of the worst things you can do. It's a surefire way to basically decimate your cost per acquisition and all the work that you've done. It's very easy to just kind of erase that.
Hmm.
I think like a lot of the times what you're seeing is like because marketers are trying to keep the C-suite happy, by getting up that personal loan campaign, let's say, and then 3 weeks later, the C-suite's like, well, wait, we want to push HELOC. What you have, because you only have so much budget, is you're turning one off. It doesn't have time to be successful, and then you're in this like vicious cycle, right? So when you really want profitable growth, you really have to make sure that you're letting those campaigns run. And then to Cardim's point, um, because they do it so well, is like they're letting these campaigns actually run its course and then using the data to push on them and say, well, listen, you want to hit these growth goals. Let's keep up our auto loan campaign, for instance, right? And here's why,
Mm.
and here's what our cost per acquisition is, and it's within our target. Like, let's keep going the course. And if you want
Wow,
to see this, we're going to need more budget, right? And he's done a great job of doing that.
that's super, super interesting. So if we wanted to get real practical and prescriptive for some of the folks in the audience, what would be the minimum length that you'd want a campaign to run? Say it's vehicle loans or say it's HELOCs to determine whether it's performing, whether it's got potential, whether you can get it to where you want it to be.
So, So standard practice is going to be 3 months, right? That's best
Hmm.
practice. But I like to look at it a lot differently. I like to go back to that sales perspective and understand what that pipeline looks like. So what I mean by that is like, how long does it actually take to close a loan?
Hmm.
Because if a mortgage loan is taking you 180 days to close or fund that loan, well, then 3 months is not going to cut it, right?
Hmm.
That's
Hmm.
just not going to work. So you really have to customize it based on the product that you're selling to be able to properly look back and see if there's success. And remember, for these campaigns to be successful, you really need like upwards of 50 conversions at a minimum until you start
Hmm.
seeing more and more efficiency. So anything before that, you're never going to hit a peak efficiency if that makes sense. So
Hmm.
hopefully that answers the question. I know it's a little ambiguous, but what I like to tie it to is always how long it's going to take you to close let's just say the potential member, potential customer.
Right. So you say 3 months for something like a vehicle loan that has typically a 30-day funding cycle from the time the application comes in. So it'd be longer for a HELOC, even longer for a mortgage, maybe a little less for a deposit acquisition, like a CD type of campaign with it's just trying to get people to rip the money in.
Totally.
That's a really good way to think about it. So that sort of kind of brings up the kind of the next issue is do you see challenges and problems with a financial institution trying to do too many things simultaneously with too little budget? So, I mean, I've seen a case where somebody had, 20 campaigns running simultaneously at $500 each. And from our perspective, each of these things just generated a handful of applications. So statistically, it was impossible to determine if they were working or not. There's just not enough data. But what do you see at your end?
Yeah, listen, but budget is a tricky one because it's what Google and Meta try to tell you at first, which is you can set your own budget, right? That's the best part, right? You could set your own budget. But what they're not telling you is that, Google Ads is 30 years old, Meta Ads is 15 years old. Multiply that by what happened in COVID, where there's like 60% more spending than it was pre-COVID. Like you're talking
Hmm.
about these really advanced, mature ad platforms. It's not really like that anymore. There absolutely is minimum budgets to play and to be able to win. And firsthand experience for Kardim and I, like we're both in the New York market, right? Super competitive. So if you think that you're just going to be able to launch with a $2,000 a month budget, and then spread that across four different product lines, that's just not going to happen. Like there's no way you could win out. We're going to be diluted by the Chases and the larger credit unions of the world, all the financial institutions that are trying to vie for those same keywords, right? Um, so yeah, I mean, I think you do have to keep that in mind that it's not really set and forget. You have to think about really what your goal is. Uh,
Hmm.
you have to understand if you need to get 10, let's say 10 funded loans um, per month, and I know it's a small number, let's just use that though. And you know that your loan team closes 10%,
Hmm.
right? You need 100 leads. So it's 100 leads times what it costs you to get those leads. That's what your budget has to be at minimum to hit that goal. So hopefully that's like a practical example, of one way that you can look at budget.
Hmm. Hmm. So, I mean, it's true. Nassau Financial is in a really competitive market. The number one metro in the country, lots of other financial institutions, big banks. If you're trying to generalize it, if you could, for our audience, say the typical billion-dollar financial institution, of which there's thousands in the country, a billion-dollar community bank or billion-dollar credit union, maybe in some um, non-NFL, non-NBA city, like Spokane, Washington. What would be the minimum buy from them? Just think about Google Ads for now. Put social, put programmatic to the side. Let's just say they want to get started with basic, cost per click, search intent-based advertising. What would you say to those folks?
Yeah, I would say if you're in a bigger metro, I would say 5 to 10K a month per product is what I would
Hmm.
work with. I think if you're in a smaller metro, you could get away with smaller than that. But again, it's going to come down to eventually making that impact. And based on how many you have to actually close to hit that goal, I very rarely find it smaller than the $5,000 budget.
Well, I think some people on this webinar are probably going to think, "Oh my God, 10K a month, that's crazy." But I think when you think about it in perspective, it's not at all crazy when you think of the cost of a branch. Traditionally, the growth came from branches, and branches, depending where you are in the country, it's going to be, 500,000 to 1 million to build out the branch, and then 500,000 to 1 million to operate it. So if you're going to do it online, I think the C-suite needs to think of the online operations as the branch of the future and fund it accordingly. So, here's 500,000 to 1 million, make it work and deliver more than the physical branches can.
Yeah, and listen, I think the statement is partially true, right? Like traditionally, it's like, yeah, that is crazy to think about spending that much on digital ads. But at the same time, like if you can measure it though, then that means you can improve on it, and then it becomes a no-brainer. You can hit goals doing that. So I think that needs to be the basis though. Like everything that you're deploying, it's dollars in, you have to understand the dollars coming out. And that's
Hmm.
what's going to make it more effective. You're setting it up, if you have the right systems in place, that's what makes it a no-brainer compared to, wow, this is crazy. And when we shift that mindset and we have the right tools that can enforce that, it's a much easier conversation. It's easier to have that level of comfortability with the C-suite and ultimately be able to make the decisions to do that.
Hmm. Hmm. Okay, well, I'm going to change gears here, a little bit. Let's talk about the other side, the scary part that nobody wants to talk about. And that I think it holds back quite a few marketers. You've done all the work. Uh, You've got, brilliant campaigns with amazing creative, feeding perfect signals into Google. You're getting prospects with high intent to do business with a bank or the credit union. They come into the funnel, and well, we're amongst friends. We can say it. They come into the funnel, and it's a complete mess. Because one thing that we do is sometimes the prospect comes in with high intent, but there's a ton of friction in the journey, and they see a bunch of stuff that they don't like, and they just go, huh, I'm out of here. I'm just going to go back to Ally Financial. And the challenge is, if you have a 100% quality campaign, but you got a terrible funnel, well, the terrible funnel is going to win out and you're going to end up with a zero. You can't have that and be successful. So, Kardim, I think you've gone a few rounds on this with your organization. So, love to hear your perspective.
Yeah, no, definitely. From my perspective, it's been a battle. I mean, we have different departments that all want their hands in the process. From a compliance side,
You
they
mean
want
business prevention? Come on.
Hopefully they're not on this call. I won't say that.
That's okay.
But
That's why I'm here. I'll say it to their face.
Yeah, they're
thank
always
you.
watching.
And then the lending department has its own they want to create efficiencies on their end where if they ask certain questions on the application up front, they don't have to try and find the answer later, even if they may not necessarily need it. So being able to see where the drop off in the applications are, truly helped have better conversations. I didn't win every battle, but you know, I got them to adjust their mindset to increase the application completion.
hmm Yeah, and that's like just free money, right? You just don't have to do anything different at your end. It just comes to the bottom line.
Yeah, exactly.
Yeah. And I think that's the difference. Opinions are interesting, but if you can bring data to the table and show compliance, look, this is really costing us. And I won't say that again about, what I really think of them, but can we be partners on this? Can we make it a little bit easier? I think that goes a long way. And the other thing that I'm fond of pointing out to compliance departments, look, the fraudsters and the scammers know exactly how to answer these questions. They'll give you the perfect answers. The questions are not going to stop them. What these questions do is they stop the real people who will make a mistake or, just don't have the patience for it and they get put off by the question. So we got to keep that in mind. Dean, how do you feel about, these funnels?
Listen, the LOS can sometimes just be the bane of our existence, right? Like the problem is in marketing, as soon as you add any degree of friction, we see really big drop-offs in conversion rate. Um, and listen, it's not something that we can just go to the C-suite or I can have a conversation with Kardim and just be like, yeah, let's just replace this with a new, more modern one that works better. Like that's a 2 year long conversation that's going to have to happen between multiple departments, right?
Mm-hmm.
Ultimately, I think what Kardim did really well that then helped us was being able to gather information about the LOS, like where were items that were just causing or steps that were causing the most friction, and then whether that's name, phone number, email, whatever that step was, right? And then make a case to the compliance department of why we need to get rid of it. And then, hey, if we're just going to, um, we can go and test this, and then we can actually measure what that impact is, if that makes sense. And that's been helpful, right? And every time that we decrease that friction, you're going to see a bump in your conversion rates on the ads on any marketing channel side, not just paid ads. It could be SEO as well. So we want to increase those chances for success.
Mm-hmm. And I think you also did something interesting, Kardim, in Dayton, where you kind of front loaded some of the stuff outside of the LOS.
Yeah. So for us, I think Cardim, this probably came like 2 or 3 years ago, when we were just getting frustrated about not getting all the information because so many people would go to these forums and then
Mm-hmm.
it's like 80%, right? Like a really large number. And it was like, if we at least had their phone number and email, we could somehow follow up with them. And Cardim did a great
Mm-hmm.
job. He built out a team, betting on that we could get more of those names. And then we could pass on that information to the LOS, by the way, which is what we did. So we didn't lose that. They didn't have to repeat the steps, but we got that information. Then his team could follow up with them, which was great because it increased our chances of success. And they're able to call them up, and we could see the loans that got funded. So that was really, really big, and just a way that we can kind of bridge the gap in performance.
So to sort of frame it for the audience, somebody comes in before you even send them to the application, grab some key pieces of information, email address, phone number, record, why they're here, put that in the CRM. So once you feed them into the loan application, if they somehow abandon, you actually know exactly who they are, what they were here for, how to follow up, and just increase the pull through because you've got their attention once. Now you just have to, take them all the way through, right?
Exactly. Yeah. So we used the landing page to do that. Sorry, I wasn't clear about that, but it was a landing page. Then we pushed that information back to the LOS.
Yeah, and I tell folks that this is super important, especially for financial services, because they have an interest. And for these products, the interest is very very time dependent. It's not like you're generally shopping for clothes, and this looks nice. Maybe I can use this for this outfit. Whatever. I end up with six different pair of Nikes in my closet. Financial products, you have a real need. You're going to go buy a car. You need one car loan. You need one car loan now, and somebody's going to get that business, and then you're out of the market for 3 to 7 years. So you got to follow up right now because you're not going to get a second shot at this thing. So, can you give us some details, Kardim, on how you built this out? Did you use internal tools? Did you use a partner? Was it hard to convince the rest of the credit union to get with the program?
No, I mean, we didn't have the data, so that was the number one problem. And when we saw Alpharank, and because we used to use a system, ooh, what was it called, Loan Liner,
Mm,
and
CMG Loan Liner, yes.
and then we switched
The
over
90,
to
the 90s called, they want their LOS back.
and then we switched over to a Meridian Link, and we thought it had all the bells and whistles, but being able to track a lot of the things that we needed to track to prove what was working, it didn't come with it. So when we found this tool, I think it was a pretty easy sell, especially with the trial and
hmm
the meetings that we have had initially. Uh, what was that? 3 years ago, I think.
Yeah, 3 years ago. Be three
Yeah.
years ago in February, actually.
And then it has been proven successful. I'll speak on what we created where we collected the information up front. And we created a whole department called the relationship specialist who follow up on these leads if they don't complete the application. And that department did 30% of all the loans the credit union did this year. So, I mean,
Amazing.
Amazing, amazing. Hey, numbers don't lie. So, talking about numbers, we have a whole bunch of questions coming in on the Q&A channel. So, I think at this point, Elizabeth, if we could hop over to the Q&A, and if we can unmute Katie Tucker and let Katie ask her question.
All right, Katie, you are now unmuted if you would like to ask the question directly to the guests.
Sure. Can you hear me?
Yes,
Yes.
we can. Hi, Katie.
Okay, awesome. Hello. I was wondering, you guys were talking about campaign length earlier, and regarding campaign length, I was wondering, we run auto loan ads year long, but we'll refresh the creative, maybe every 30 days, sometimes 60 days. And I wondered if that hurts the effectiveness or if it's okay to refresh creative.
I think I could take that one. It could definitely help, but it can go both ways, right? So when you're doing so one, I think creative refresh, Katie, like you are on the right track. That's amazing. You want to be doing that. But you don't want to do it in a silo. You want to see, let's say if you have a baseline of creative, you want to see how that creative refresh is performing against what your baseline is. So I think that the practice is great, but just make sure that you're verifying that it actually is performing better than the creative that you once had. And I know that can get a little hard with sometimes interest rate based creative, but
Hmm.
that's what I try to tell marketers.
Okay, thank you.
Excellent. Thank you, Katie. Elizabeth, could you find Kelly
Kelly,
in
yes,
the...
yes,
Oh,
you're
there she
now
is.
muted. Yes.
Hey there, thanks so much for your information today, guys. This has been great. My question is specifically for Kardim. Are you guys currently using Access version of Meridian Link?
I don't believe we are. I'll have to double check, but I don't believe we are, no.
Okay, the second version, the second question that I have too is related to those the forms prior to filling out the application. So, kind of take me through that a little bit. Does the information once gathered from that lead generator, does it populate into Meridian Link?
Yeah. So we have two ways we do it. And we had to ensure that, people didn't get annoyed answering the same question over and over again. Dean's team helped us with our paid advertisements. So we have a landing page company that we use called Instapage, and they'll fill out the name, phone number, and email there. It'll transfer over to the application. We also worked with a company called CU Collaborate when we expanded our charter, and they helped us do a similar thing on our website because we weren't collecting the name, phone number, email address on that side. So, but both organically and for paid advertisements, we have it completed beforehand.
So I guess one of the things I do want to just ask is that if they are filling out those lead generations, that information does populate into Meridian Link.
100%, yes.
Okay.
Yeah, Kelly, if you could, we'll follow up with you. We have a one pager on how you'd want to hook up your data capture, your CRM, and then be able to pass this back into Meridian Link, whether they're immediately going through the form or you're sending them in like a remessaging email or some other kind of communication that's trying to get them back into the funnel. So you can put them back, into the right product that they had an interest, with their email number, their phone number, all that information, so they don't have to type it in again. We'll get that over to you.
Perfect. Thank you both so much. I appreciate your time.
Oh, you're welcome.
Thank you.
Cool. We have some other folks, who are a little bit shy, and I could see why they don't want to sort of state their name. So I'll read it out for them. Where do I start with this? We're a small marketing team. We don't have extra non-discretionary budget. It sounds great, but how do I champion this type of work with the CEO so we can get this level of tracking and growth? Kind of that's like an inside baseball question of how to work the with the management team. So, Kardim, I'm going to pass that to you.
I'm sorry, I was just trying to get the access. Are we using the access Meridian link question answered? But could you repeat one more time?
Well, it's a small marketing team. They don't have extra budget. They like to do this, but they don't know where to start to uh, to get this tracking and growth and how to talk to the executive team to help them to get them that extra budget. So,
Yeah, no,
imagine you had no budget and you wanted to do this with Dean. How would you get this started?
once you realize that you kind of have to do it, the conversation changes a lot. We have a small marketing team ourselves, and our budget is not big at all. But when you realize that you can make more money without spending any extra advertising dollars because of the data that's provided, it can be the sell can be a lot easier. And I would say take the free trial and test it out. When you have that first meeting with Carlo and you bring the executive team, he puts it in a very simple and easy to understand way for everybody.
No, thank you, brother. Appreciate that. I got another one coming in. This is for Dean. So this institution has an agency, but they don't provide the marketers any of this data. I think you said it was vanity metrics and brand building, which they say is essential. So how do we get the agency to give us this sort of visibility and be able to focus on performance-based marketing?
Well, I think it needs to be a core philosophy of that agency, right? Are so is it clicks and impressions based, or are they really going into the conversations with you and talking about conversions and then asking you more questions about your organization or the business and how it works and how do their numbers reflect what the top line or bottom line impact is there? So I guess what I'm saying is like the first step is they need the data to at least benchmark, right? So if you're going to be with your agency, they need to figure out a way that they can tap into the numbers that your C-suite is measuring you on, right? They should be a partner with you so that, they're helping you advance in your career just as much as, you're helping them by choosing them as a partner, and you guys should be growing together. So I think the basis of any great relationship is making sure that they have that measurement platform, whether it's, Alpharank or they're coming up with something, but Alpharank is a great one. That's why we love working with Alpharank because it's specific to the industry, which I think is really important. Like they have to understand what credit unions and community banks are going through, and that you guys are speaking the same language, and you guys can get to the ultimate goal that you're looking for. So hopefully that's helpful.
Great, great. So we've got time for one last question. This one that's come in. Kardim, what has been the most helpful lesson you could have learned that you've learned that could guide us as we try to implement this kind of performance marketing and growth at our financial institution? It's kind of a loaded question, so hopefully you can unpack that a little bit.
The most helpful lesson. I will say this. I was speaking to a friend the other day, and they said, what you don't measure, you can't manage. I mean, we were talking about my weight, but I think it applies. I think it applies here too. And one thing, especially with the changing the applications, the questions, the funnel on the application, it's not going to happen overnight. There's no simple fix. There's no quick fix to get your conversion rate up dramatically overnight. It's going to be little steps and small conversations that happen over time, and you'll see the results as you go.
Fantastic, fantastic. Now, in the chat, some of the folks would like to connect with you offline about some of the interesting things you did with grabbing this data and setting up relationship specialists. So my suggestion is that you connect through LinkedIn, and that we would like the conversations and exchange of information to continue to make it a prosperous and productive environment for everybody. So we'll make those introductions. We'll put the LinkedIn profiles in the follow-up email, and you can connect to there. And we'll also send some emails offline to the folks who put various requests in the chat. Kardim and Dean, I wanted to thank you on behalf of the audience. You've been extremely generous with your time, and this has been a fantastic discussion. With that, may you have warm and happy holidays, and we'll be talking to you soon. Take care, everybody.
Thank
Thank you guys. Happy
you.
holidays.
Bye-bye.